Hey everyone, my name is Griffin and welcome back to yet another chapter in the Millennial Investing 101 series where we cover a variety of different topics mostly tailored for Canadian investors. In today's video, as the title would suggest, we're diving into 5 different Vanguard ETFs that you can purchase right now in 2019. This video is going to give a more in-depth look at some of the ETFs that we covered in the ETF Investing for Beginner video, as well as the Investing Your First $1,000 as a Millennial video, because a couple people have asked me to go into more detail about these specific ETFs. So if you've seen some of my other videos, you're more than likely aware of my position as an investor and how I like to place my money in the markets. Now personally, I'm super busy running my business and conducting my other ventures, but I still recognize the importance of having my money invested in the market and leveraging those funds so that I can incur interest on money that I've placed in the market. Now that said, I'm not someone who wants to be actively looking through quarterly earnings reports and basically trying to find the best stock possible to invest in, and that's the reason why I invest in ETFs and would suggest that you do as well. I've identified a handful of different ETFs that I personally think are going to do well over the long term, and I just continue purchasing those same ETFs over and over again regardless of the price because I have a long-term vision and I'm going to benefit from dollar cost averaging over the long term of my investment horizon. Without going too into detail about what an ETF actually is, you're essentially buying a piece of a larger fund, and therefore you're exposed to a multitude of different assets while still holding one single ETF in your portfolio. An ETF is kind of like a mutual fund, but you can buy and sell it on an exchange as you would a common stock. The real beauty of an ETF is when purchasing a single share, your $30, $40, or $50 invested in that one share of an ETF is going to expose you to a multitude of different assets and companies, and therefore the performance of your investment is spread across a ton of different assets instead of being 100% dependent on the performance of one single stock. An example of this would be VFV, which is Vanguard's S&P 500 ETF that tries to replicate the returns of the S&P 500, and it's actually one of the ETFs that we're going to be looking at in today's video. Alright, so now that we're on the same page as to what an ETF actually is, let's dive into my top 5 Vanguard ETFs. Vanguard's an asset management company that offers a variety of different ETFs that span different markets and world regions. The first Vanguard ETF that's on today's list is VFV, as we mentioned earlier, which is Vanguard's S&P 500 ETF, which seeks to track the S&P 500's performance. VFV, or Vanguard's S&P 500 Index ETF, that seeks to track the performance of a broad US equity index measuring the investment return of large cap American stocks. Each share currently trades at $69.45 on the Toronto Stock Exchange. The investment strategy of this ETF is a fully replicated index to provide exposure to the largest US companies while keeping a passively managed, cost-effective management technique. In my opinion, VFV is a must-have in every Canadian investor's portfolio because it's comprised of the best overall performing stocks in the largest world economy. If you want to be exposed to the growth potential of stocks while still spreading your investment over a variety of different American industries, then this is your answer to that. If we take a look at the technicalities of this fund, you'll notice that the management fee is 0.08%, and this is due to the passive management approach that is typical of ETFs. There are currently 508 holdings in the fund for total net assets of $2.3 billion. The top 10 current holdings in the fund are Microsoft, Apple, Amazon, Alphabet, and etc., which comprises roughly 23% of the entire fund. And finally, VFV offers a quarterly dividend schedule, and the income distribution at the last quarter was about 32 cents. If you want to know more about VFV, I highly encourage you to go check out the VFV fact sheet on Vanguard's website because it's truly a great ETF to own in your portfolio. The second ETF in Vanguard's lineup that we're going to be taking a look at today is VEE, or Vanguard's Emerging Market All Cap Index, including China, which currently trades at around $32 per share. Now, although this ETF did take somewhat of a hit in recent months due to some international trade wars, I still personally believe that this is a good ETF to own if you want to be exposed to emerging markets and the global economy. Vanguard's VEE ETF seeks to track the performance of a broad emerging market index by investing primarily in large, mid, and small cap stocks of companies located in emerging markets. The management fee for this fund is higher than VFV, coming in at 0.23%, which is still significantly lower than any mutual fund. VEE has holdings in roughly 4,654 companies for a total of $1 billion in net assets under management within this fund. Some of the largest holdings in the fund are Tencent Holding Incorporated, Alibaba Group, Naspers, China Construction Bank, and a variety of other Chinese companies. If you want to know more about VEE, I've linked the fact sheet down below in the description so that you can take a look for yourself. The third Vanguard ETF that we're going to be covering today has the ticker VUN, which is Vanguard's US Total Stock Market Index that currently trades at $53 and around 90 cents. Contrary to VFV, which tracks the S&P 500 index, VUN tracks the performance of a broad US equity index that measures the investment returns of primarily large cap US stocks, but also invests in mid-size, small, and micro-cap stocks. In addition to this, the fund not only invests in value stocks, but also growth opportunities. This is really its differentiating factor with VFV, and the fund currently holds 3,607 different securities for a total amount of $1.9 billion in net assets under management. If we were to take a look at the top 10 held assets, it looks quite similar to VFV with Apple, Microsoft, Amazon, and Alphabet at the top of the list. But this fund is also invested in thousands of smaller size US-based companies. So essentially you're exposing yourself to a larger variety of US stocks, and the management fee for this ETF is 0.15% with a quarterly dividend schedule and an income distribution per unit of roughly 25 cents. If you're enjoying this video up to now and getting some value out of it, make sure to like the video and comment down below which ETFs you're currently invested in. Next up on the roster is an ETF with the ticker symbol VXC, which is Vanguard's Global All Cap Index, excluding Canada. The purpose and goal of this index fund is to seek and track a broad global equity index focusing on emerging and developed markets excluding Canada. The ETF currently trades at around $38.10 with a management fee of 0.25% and invests in large, mid, and small cap companies. Now this fund has a lot more holdings than the ones we previously covered, coming in at around 10,292 holdings, which represents $851 million in assets under management. The top 10 holdings are once again large American companies, but their weight only represents about 10.9% in the entirety of this fund compared to VFV where it's about 24%. Okay, so you've probably noticed up to now I've only covered equity-based ETFs, and there is a reasoning behind that. As a younger investor, I personally believe that if my investments are more heavily weighted towards stocks and equity ETFs, then even if it's more volatile with a longer time horizon in front of me, I'm gonna more than likely benefit from a higher return than if I was more heavily invested in fixed income assets such as bonds and bond ETFs. For this reason, I try to keep my investment portfolios at roughly an 80% equity split for a 20% fixed income split. So depending on what your goals are as an investor, where you're at in your investing career, and how much risk you're willing to take with your investments, you're gonna wanna tailor your portfolio to have a certain percentage of fixed income assets as well as a certain percentage of fixed income assets. If you wanna be more conservative, you could do a 60-40 split or even a 70-30 split. But personally, I believe that if you're a younger investor and you have a long time horizon in front of you, I would go with an 80-20 split. So we've now made it to the last ETF that we're going to be covering in today's video, and that has the ticker symbol VAB, which is Vanguard's Aggregate Bond Index. Unlike the 4 other ETFs that we covered previously that were funds holding equity in companies, VAB is a fixed income asset holding fund. The goal of the fund is to track the performance of a broad Canadian bond index, and in fact, VAB seeks to track the Bloomberg Barclays Global Aggregate Canadian Bond Float Adjusted Index. The fund invests primarily in public investment-grade fixed income securities issued in Canada. The reason why I included a bond tracking ETF in this portfolio is due to diversification. Without going too into detail about the reasoning behind this behavior, typically when equity markets go down, fixed income markets will go up. So therefore, when your stocks go down, usually speaking, your bonds will go up in value. The Vanguard Aggregate Bond Index currently has 953 holdings and comes with a management fee of 0.08%, which is again super minimal. The dividend schedule is monthly with a distribution per unit of roughly 5.7 cents. If you were to build an investment portfolio that held Vanguard ETFs, these are the top 5 ones that I would personally hold in my own portfolio, and I actually do own each one of these in my portfolio. I've included links down in the description to each one of the fact sheets for the ETFs that we covered in today's video so that you guys can get more detail about each one. If you enjoyed today's video and found some value, make sure to give it a thumbs up, and once again, comment down below which ETFs you are currently invested in, and subscribe to the channel if you enjoy talking about personal finance. So on that note, I'll see you in the next video.